Nau mai, hoki mai, kia the folds, imahine, ko Duncan Greive, tōku ingoa. I'm back after 3 weeks away and back with Glen Kyne. Thank you for holding the fort along with Anna Rafferty Connell. That was great. It was great to listen to it and very soothing almost to have the fold just playing on in my absence. But also great to be back.
Yeah, kia ora, Duncan. Good to see you. You're looking reasonably well, jet-lagged a little, I imagine.
Yeah, I've been on the ground about 26 hours, confident that I can start the podcast, not confident I can finish it, but we'll just try and front load and hopefully I don't just completely slide off the mat towards the end.
This will be fun.
I think so. So what we're going to talk about today is something that's sort of at once like blindingly obvious and also kind of, I think, mysterious to people, even who might be paying a lot of attention to media. And that is sort of how the media is funded in different ways, prompted by two pieces that have come out over the last week. One of which was Shane Curry's piece on Friday that basically made public what has been, talked about a lot in the background over the past few sort of weeks and months, which is basically a push by the production sector in New Zealand to do two things. One of which is have their commercial productions become eligible for the screen production rebate, the spur, as it's known in the industry, in which basically whereby qualifying spend, the government returns some of that money to you. And the second is to make the production costs of sport, and particularly things like rugby and cricket, these are very considerable because of the hours involved, eligible for the same scheme. Then on the following week, Patrick Smelly wrote something under a very, very laconic headline, just something about just some more reckons on journalism or something, which basically went through the various ways that journalism has historically been funded and might be funded into the future, and kind of opined on the one that he thought was the most reliable. And it's basically just sort of occurred to me reading that and thinking about Shane's piece, which I've written about the screen production sector and various things that they've been lobbying for over the last little while. Some of it successfully, the likes of Shorten Street is now spur eligible, for example. But broadly speaking, there is a resistance to putting more things into that because it is, as we'll get to, quite a considerable sum. But basically use that as a jumping off point to talk about how various things are funded and what they sort of require to run, because it is getting towards a stage where either something changes or so much of it goes that it becomes almost non-viable.
Yep. There's been so much downward pressure on the ability to fund journalism or create New Zealand content in the last 2 years. It's been, we haven't seen that sort of pressure before in our media system. We don't need to cover the ground of what that's resulted in, closure of News Hub, TVNZ, major cost reductions, etc. And the scary thing is, and why it's important to understand what the options are as part of this pod is, we face a world now where in the US, the advertising market is grinding to a slowdown right now because of the impact of the Trump tariffs. I'm hearing early whispers of that starting to appear in New Zealand. It's sort of really difficult to think about what would happen if we go through another major downturn for an extended period of time in the advertising market, given just how reliant New Zealand media are, broadly speaking, on that advertising dollar.
It's true, and it's sobering that just the media has gotten used to kind of being hit and occasionally having some good things happen too, but broadly speaking, the trajectory goes one way. But there's something about because it was so good for so long, and because there is an assumption that this thing is important, therefore it will be rescued, that you just have to hold on and there's a good day coming. That's almost like you kind of have these two things that sit there alongside the we're used to it all, it kind of arcing down. But there is always a chance, and I think that's obviously what we've seen in kind of geopolitics over the past few months, that things can get worse, and they can get dramatically worse very quickly. That's a sort of a constant of now.
Well, especially when it's uncertain, or uncertainty is dominating the political agenda, and that's what we're seeing. This constant pivot and change in policy and statements, and advertising markets act. I've always said this: they act no differently to the stock market. They're sentiment based, and if there's nervousness or anxiety or uncertainty, then the first thing advertisers do is they slow down the marketing spend until they have confidence that their investments are going to get a return.
Yeah, I mean, ultimately, it's consumer sentiment that drives everything, right? And if they think that people are likely to keep their hands in their pockets, then they wouldn't rationally go and advertise anything, whether it's brand or retail advertising, whether they're trying to generate demand that afternoon or 2 years into the future. If you don't know what reality is going to look like at that point, it's a rational act to keep from advertising.
We do it as consumers ourselves, don't we? We live and breathe that philosophy, hopefully.
Absolutely. And that's all setting aside the extent to which where advertising used to be very largely contained within a local ecosystem, which is largely what we're talking about here. Now there's this whole second valve, which is the big tech companies. So, even when you pull back in one area, it doesn't necessarily mean you have or haven't pulled back in others. And there's obviously a secular shift towards those, which we don't need to get into again here. Before we get into it or further into it, I wondered if you could talk, because you've had very senior commercial roles at NZME and what was then known as MediaWorks before taking on leadership of WBD. So we're intimately familiar with how advertising works at very big companies, but also what it allows, i.e. what it funds. Can you maybe give us a quick sense of in a commercial, or in those big commercial organizations, and at the time, both of them would have been largely, not completely entirely commercial, but very heavily commercial in terms of how their media and entertainment products were funded. So give us just a top line of what advertising made happen.
Yeah, well, it was everything. I was at NZME before the paywall was introduced on the Herald. So, the entirety of revenues generated across all of those companies was effectively 100% advertising driven. And so, to the extent that, if you were running a sales team around the country, in a small market, you would wake up and the first email you would see in your inbox from the company would be the overnight sales and how you were tracking towards a revenue target for the month, for the year, etc. And so the organisations just lived and breathed being really, really large commercial ad sales businesses. The entire leadership team were focused and geared towards that. If there was a slowdown at any point, being a commercial director was a high pressure job because all eyes would turn towards you to try and fix the problem. And sometimes those problems, were a little bit intractable or would take time, to solve as you would write out different business cycles. And I think one of the interesting things when I think back on that time is we always knew, go back 10, 15, 20 years, it was always known that the businesses had to transition from a legacy advertising business into a digital advertising business. And everyone made big investments to do that on the hope that digital revenue would usurp and take over the loss of legacy linear revenue. That hasn't actually necessarily bared fruit. The rate of growth of the digital side of the business, and I'm speaking broadly here across the industry, hasn't overtaken the decline in the legacy business. And also, I think people underestimated just how good Google, YouTube, Facebook, Meta, everyone was going to be in that space and how dominant and big they would get. And you see that in the latest ASA figures, right? We have gone from an ad market point of view that in 2019 was about $2.7 billion. This year it's about $3.6 billion. It's growing. But the share of local media within that has shrunk. And, from a television point of view, it's gone from in 2019, 575 million down to 490 million. Digital revenues are growing, but not at the rate that's required to get scale. And so, as a commercial director, you're kind of fighting this fight where you're fighting your local media competitors. In the meantime, the big globals are just taking more and more and more away, and then creating sustainability challenges. And so the big question is, what are the alternatives, right? If this has become something that you can't directly impact or change, what are the alternatives? Funding.
Yeah, and that's what we'll sort of get to later in the show, is talking about what the sort of current and to nod at some of the proposed ideas. Before we get to that, though, I wanted to talk about a couple of things which, seem kind of important to think about, particularly with this discussion. So, can we talk about a show like The Block, right, which is, ran for many years, was a big kind of tentpole piece of programming for 3, which was
it was the biggest. It was the biggest. Yep.
And when you watch The Block, as I did for another podcast, you're kind of struck by 2 things. One is it got bigger and bigger in terms of the number of screen hours that it took up, but also the number of episodes per week. And it also, the integrations were more and more persistent throughout it. So I think there were Yale locks and McDonald's deliveries.
Yep.
And it was just so you could see that this thing had 2 huge functions for the network. It rated well. It, took up a lot of hours, so you could sell a lot of ads in between it. But also you were selling a lot of packages that were baked into the show. How important, and obviously, needs not. It's worth noting the block isn't screening this year, so obviously at some point the cost of production has been too steep to meet. But what was the block to MediaWorks while you were running it? Or sorry, to WBD?
Yeah, well, and MediaWorks prior. It was an enormous project. So to give you context. The show would start running, depending on when it was screening, but let's just say it stopped running, end of June, early July. They would pick up pre-production, August, September for the following season. And the commercial team working on monetizing that and selling all those sponsorships and brand integrations would start at the same time. There was a team of about 20 people that would run for about 9 months of the year just working on that show. And they'd be doing other things, but that was the majority of their focus. It was a juggernaut of a show. It obviously, was running 4 nights a week. That's a lot of brand integration and a lot of airtime and space to work with commercial partners. Commercial partners had to often run promotions where they would have to import certain items or certain brands to make them available sitting behind the promotion in the show. So it was just an enormous exercise and constant dialogue between production company, broadcaster in this case being 3, and the commercial market, trying to facilitate and make all of this. And sometimes some tensions, because sometimes the production company would want to do a deal with a particular partner to bring the cost of building their houses down, whereas the commercial team would want that money as ad revenue. So you had some of that stuff going on as well. Yeah, but it was an absolute juggernaut of a show. Few shows, if any, are that intricately put together in terms of brand integration.
So, because that's exactly the kind of show that the commercial product, it's a commercially funded production, i.e. it's never got New Zealand On Air funding, and there isn't really a suggestion that it should, but what they're wanting is that it become eligible for the screen production rebate. And the argument is that, just as the rest of the production sector, if you're making an Avatar or like a big Netflix show here, that those can get this rebate because it generates economic activity and jobs. They're saying, well, this does the same, but plus these shows, while not culturally fundable, are very popular and have economic flow on, and that's that what you're describing from a commercial impact shows that is an example of that. So it is worth thinking about that. While the idea of the public funding them in a New Zealand On Air sense is probably a hard sell, you can see that there is a basic, that it makes sense from that perspective.
Yeah, the current trend for the production companies is not good in terms of the broadcasters not funding nearly as much local production. And so partly, the broadcasters are doing this because they need time to figure out the new kind of operating model and the new economics to produce more content. And the production companies, to keep their staff and keep the productions going, they need a form of funding, right? And so I can understand certainly why this has all come together. And you're right, there's a real kind of culture debate, isn't there, around is the block, and let's keep that as an example. That's an international format. New Zealand On Air historically have not funded international formats because they're considered commercial formats.
Though there are exceptions. Match Fit, for example, which Bailey Mackey's Pungo makes, has been considered, and I think rightly, a fundable format. Then there are some sort of more edge cases in between.
Yeah, but I think that, again, that's a great example because that's one where it has been funded where I think, could form a very reasonable argument to go that is a reflection of Kiwiana, of the issues and challenges, around men's health, women's health facing Kiwis. And I'd argue that the block is, when you watch that show, even though the beats and formats are quite familiar to the Australian show, it turns up in a very Kiwi way. And that's the argument, right? Are these shows, can they be produced in such a way that they do actually reflect New Zealand society and therefore are worthy of funding? It's going to be a really big decision for New Zealand On Air to make over the next little while.
Yeah, I think it will. And I mean, the other thing about them is that they're massively popular.
Yeah.
So a lot of what New Zealand On Air funds very much satisfies various kind of cultural criteria, but if you don't often see it showing up in the ratings, therefore it's below a particular level.
And if we don't have it, what do we have in its stead? Like what replaces it? Is it going to be a local New Zealand story? Possibly not. Like we don't know, but what would it be? And then what does that mean for us as a society if we're not seeing New Zealand faces and voices tell our stories on screen?
Yeah, absolutely. And that was, I remember making the argument when the project shut down. Again, another format show imported from Australia. I remember seeing you speak. You're clearly very moved by it after its final taping. And, that show was both an Australian format, but, I've watched the Australian one. It's an hour long, feels really, really different. The New Zealand one absolutely had its own identity, but also it was just telling the vast majority of New Zealand stories every night. So it's kind of this meta thing where it can kind of, if you're think about Marlon Williams, got a new album out. When the project was on air, he could absolutely go on that show and kind of talk about it. That's just not there anymore. The 7:30 lineup now starts at 7 p.m. on 3. Second question before we get into the sort of current and future state of funding, the government's sort of COVID-19 and then the kind of flow-on sort of vaccination campaigns and various other things that came out of it, how, they came at a really freaky time, closed borders, etc. The PIJF has been subject of endless discussion, but my understanding is that the government's ad spend on the COVID campaign was around twice the size of the PIJF, which big chunks of it went to local media too. How meaningful a proportion of revenue for the likes of WBD and NZME, TVNZ and so on was that in that period of time? Because part of the reason I feel like that media is feeling so raw right now is there was a bit of a false dawn when things felt kind of okay in that 2020-21 period that was, at least I wonder how much of that was driven by that massive always-on campaign.
It was enormous. So, going back, it's interesting to go back and think about those days. At the time, I was working for MediaWorks. TV3 was for sale. Literally overnight, within about 48 hours of the first COVID lockdown, was that April 2020? Around
late March.
Late March. Within days, 40% of the annual revenue had disappeared, had gone, had just stopped, and there was no telling when that was going to come back. Obviously, it did slowly come back as lockdowns were released and we went through that kind of period, but that government advertising was an absolute lifeline to be able to get back to and prove back to shareholders that we could get a revenue line back to a decent number, make sure the business was organised and from a cost point of view to deliver for the full year. So it was enormous. But you're dead right, because what happened is we came out of COVID. particularly after the Auckland lockdown in 2021. There was a real sense of optimism, and the ad market was flying along. I remember at WBD, I was at WBD by that point, and the first 6 months of 2022 were brilliant. We were tracking ahead of all of our targets, feeling really, really good. And then all of a sudden, post a war being started in Ukraine, a bit of a cost of living crisis starting to bear out on the world because of inflation and a number of other things, we started to see that ad market come off. But actually, underlying all of that, we'd never actually really recovered because we were being, in part, propped up and buoyed by a large amount of government spending that was coming through.
Because it wasn't actually just that campaign, right? It felt like this was a very comms-focused government, so and it was one which was very comfortable with the idea that a good communications campaign or idea could address a lot of different aspects of things that were challenges in society. So obviously we've always had seatbelt campaigns and drink driving campaigns, but you started to see there was a big one thing which I think about and have written about was there was a big recruiting people to become corrections officers, and that was a TVC. That might historically have not, there wasn't this. That was a government that seemed to have a theory of change that was if you can implant an idea into someone's head, you can change the way that they think about a profession. And that was there were dozens of different versions of that and different agencies with everything from health to transport to a whole bunch of things. So, and this government was in part elected on the idea that was a problem and that needed to go away. So if you think about all of these things coming together, that's partly why, especially the purely ad-funded parts of media. So as you see that kind of flowing away, it wasn't just the COVID campaign, it was just in a whole bunch of different ways that collectively added up to the government as a really big client that has dramatically shrunk since then.
Yeah, and I remember lobbying the previous Labor government around a number of things to do with the operating models in New Zealand, sustainability and media, and there was a lot of listening. There wasn't necessarily a lot of action at the time, but there was certainly a lot of listening. But I think you're right in that the Labor government were prepared to spend money on local media, using their own agencies to do so. This government, not so much. But actually, we shouldn't, we've got a real problem anyway. We're reliant on our government spending to be able to sustain advertising in media. That signals there's a much bigger underlying problem around being too reliant on advertising revenues and not having a diversified operating model where revenues can come in other ways.
And that's really what Patrick Smiley's piece today for Business Desk was about. That, and this is a generalization, but I think it's largely correct to my experience, that generations of sort of managers, commercial people, executives within media have sort of been waiting on an ad market recovery for years now, and Patrick was kind of upfront about, I'm not sure that day will come. And, he basically goes through a few of the different potential funding sources before landing on, for him, that paywalled news sites are the best model for journalism. He wasn't talking much more broadly than that. And I think two things. One is that business news is, like Business Desk, fantastic product. I'm big admirer of it. It's also one which is the most fundable by its audience, because what they're effectively selling is business intelligence. It's actionable, and it should be able to make its readership money, literally, with what they're spending.
And NBR, right? They don't accept any advertising whatsoever. 100% paywall business and doing fine.
I mean, and they're both excellent products, and I'm not saying that all of the problems of the media, the things that look quite threadbare or don't have the same quality they used to, are down to money, but a lot of them are. A lot of the time the choices they're making are desperate ones. They're trying to do too many things.
Can I just take you back one step, Duncan? This theory that we're all waiting for the ad market to recover. The numbers in the ESA make it plain and clear. There is not a problem with the ad market. The ad market is growing. The share of money that is being taken by local media, that is what is declining. And so, we don't have an ad market problem. We've got a utility problem within that ad market for local media.
Yeah, it's a really important point to not forget, is that while local media, which tends to look across the street at its competitors and when they meet over a beer or something, they say, yeah, it's really tough. I got a couple of emails today from people saying as much. And yet, if you look at the overall pie, it's fine. So it's really just that the amount that is flowing to the tech companies is they're taking an ever larger share. So let's talk about if we're just going to think about beyond advertising. Let's assume that the ad market will, if there are great economic times, we will, it'll obviously be good for local media, but that the old model of advertising funding a huge number of different sort of products, from everything from print journalism to commercial radio to, you name it, the world of media that we knew and loved historically, that's not coming back. And in its place, there are a few options to kind of supplement that. There's reader revenue, so that's subscriptions to everything, things like the Herald's paywall product. There's Sky. There's another massive subscription product. So sports, for example, is really audience funded to a large extent, or to a much larger extent. There's the donation model, which the spin-off members, anyone who's listening who's a member, continue to be very grateful to you. And that's Smelly's contention, is that's the only reliable funder of journalism. It's also not really available to all media in the same way. Did you ever even particularly contemplate that at WBD?
Well, we were fortunate at WBD because we had a large global SVOD product like Max, and so bringing that into the market in the way we had with Sky was very beneficial from the company. But as a company, that is very much where the future is heading. It's to grow Max as a global streaming platform and add digital ads into that product. And as the legacy business gets smaller and smaller, at MediaWorks it was interesting. We absolutely looked at a couple of things. One was, could we introduce could we introduce a paywall for radio? Could we introduce a paywall for 3Now? Were they sustainable models? Obviously, neither happened. But the other one was looked at, which was interesting. Could we unify audience measurement across out-of-home, radio, television, and digital in such a way that the portfolio of assets could be put together and bought once under a single trading currency? And would that be a point of difference to give scale in the market? The reason that didn't happen is the business 3 was subsequently, put up for sale and sold, and so that project never got any momentum. But should that have happened, that would have been an interesting, really interesting case study to put together. And there are people trying that around the world. So, Global Media in the UK, for example, putting radio and outdoor together to solve that is an interesting case study.
So you've got subscriptions, which work for some media, not for others. Very successful pay TV company in Sky, and TVNZ openly contemplating, and I think probably will launch a paid service. But those typically don't become. It's very hard to switch from a pure advertising funding model to another one. So let's sort of set that aside, especially as we've talked about a lot on the podcast. But so the other elements are. There's the screen production rebate, which is anywhere from 5% to, I think, can get close to 40% of, they call it eligible spending. So there's a lot of technicality within that, but it's about how many New Zealanders you employ and in what positions. Is it a New Zealand story? That started out just within film and has gradually spread to television as well, to firstly to international TV productions. The whole principle behind it, I should say, is that these, was that something like The Hobbit or Avatar could be shot anywhere in the world, and it's a huge economic gain for it to be, shot in New Zealand, and everyone else is doing it. I mean, these versions of these schemes exist almost everywhere. In fact, one place where they don't particularly exist is California, and that's largely why Hollywood is a financing office, but it's not really a shooting location for film to anywhere near the extent that it used to be. So that was the argument. Now, that's not true of Shortland Street. I mean, they point out the irony that if Home and Away were to be shot here, that would be eligible, but and that was effectively how they won that argument. But the further you extend it, the more difficult the argument becomes, I think. So, but anyway, there's the screen production rebate, and I'll sort of put some numbers next to that in a bit. There's New Zealand On Air, which funds RNZ and a whole bunch of programming according to the sort of distributed public media model. There's the New Zealand Film Commission, which funds film, largely local film, but also administers the rebate.
Yep.
And then there is technology companies, which Google has deals with a number of companies in market, including the spin-off. Meta has used to have some smaller deals. I think those are all now lapsed. And as Smelly pointed out in his column for Business Desk, where there has been legislation to try and compel it to do that in Canada, it's just removed news distribution from all of its products. And I've read coverage of what that has made them like there, and they've got an election coming, I think,
daily,
maybe even today.
Yeah.
So that's it's a pretty gnarly environment. In Australia, they're constantly threatening to do the same there. So it's a tricky thing. And yeah, am I missing anything in terms of?
I think there's endowments. There's do we see a world? We've got the billionaire situation. We've got one here locally potentially at the moment, but there's Jeff Bezos, Washington Post. So you've got wealthy individuals.
Yep.
Potentially looking at media assets.
And I think The Guardian Australia was partly backed by a wealthy individual who wanted to see a sort of a larger opposition to the Murdoch press, for example.
There's also private equity floating around. Always they tend to look at the bigger media companies with strong cash flow that they think they can sweat the asset for a little bit.
But that's in terms of the actual kind of ongoing funding rather than kind of market entrance. That's largely it. There are lots of people arguing that the government should be funding more. If you look on a per capita basis, that New Zealand, even if you total up everything we do, it's not a particularly we're a small country, dispersed population over some long thin islands, and yet we fund public media far less than a lot of countries to which we typically compare ourselves, and we certainly don't have anything like a BBC or ABC here. So you mentioned before private equity and these and kind of wealthy individuals coming in and buying organisations, but what we've seen more in a local context, and certainly there's potential for it to kind of expand still, is wealthy individual starting media brands and then operationally funding them without being overly concerned about the financial outcome. The most prominent example that we've seen locally is The Platform, which people can have their opinions on it, but I think they've executed incredibly well. They've got a YouTube audience, which last I checked was well north of 60,000, very regularly get clips that are sort of 10, 20, 30,000 for interviews that are pretty low tech. Often it's just Sean with a disembodied voice on a phone, and yet they've clearly found an audience. But that did require the right family basically saying, we believe that there is a gap in the market here. So, yeah, I mean, and there's no reason why that might not happen at a greater scale, right?
Yeah, I think underpinning this, you see this in a lack of trust in media coming through the various media surveys that are done. And the most recent one, where actually trust to some degree is flattened, but it's still very low in the Western world of New Zealand media here. And I think what you're seeing is, whilst trust of media outlets is dropping, trust in individuals is growing, and that's consistent with how we've seen the growth in social media and people following individuals. And I think platform's a great example with Sean, where clearly has his audience and a lot of trust. And I think the potential for wealthy people who want a voice in media, who are prepared to fund and create a platform or create a voice to market, seems like something we're going to see more of in New Zealand. You certainly see a lot of that in the US and in Europe. Feels like something that's possibly going to turn up here. What do you think?
Yeah, I think it's inevitable. The crucial difference, right? I mean, if you're buying a company and then sort of putting a thumb on the scale, that's what people have accused Jim Greive and the sort of group that he's putting together of wanting to do with NZME. It's something that clearly Rupert Murdoch has been a master at for decades in other countries. That's one approach where you're doing it both for ideological reasons and because you want to make a commercial buck out of it. There is also, because the cost of creation of media and distribution is so much lower now, I think it becomes quite trivial for people of very extreme wealth to do something like that, and that's what you see with the platform now. I'm sure that if Sean were here, he'd say, "Well, I'm being asked to pay my bills," and when you have that kind of YouTube reach, you can through their revenue sharing model, they'll be generating significant income out of that now. But the fact is, it got the seed funding and was given time to develop that in a way that a lot of other media organisations wouldn't necessarily have. So that's another strand of funding which sort of exists out there outside of those that we've detailed that certainly has the potential to grow.
Well, and you've made the point before on the pod, Duncan, that there has never been a time in New Zealand media where these assets are more accessible to acquire or buy by wealthy individuals.
Yeah, and I think that's you're seeing that with the Greive sort of. It's not quite a takeover, but it's an attempt to reformulate the board thing with NZME. You also, if the rumours around Trade Me and stuff are true, they're not doing that for a political project, but they're doing it because they see that this is a cheaply priced asset, right?
Well, and isn't that an interesting potential funding model for journalism? All of a sudden, a commercial marketplace is actually the one that's funding the journalism body, and that's that possibly a sustainable model. And would we see more of that, where actually commercial marketplaces or retail brands potentially want to buy the media asset because the path of audience from the media asset back to their marketplace is really valuable? Yeah,
and I think that sort of speaks to the idea that while this world of advertising not being the funder is kind of understood, what comes next remains unclear. What are the generative AI companies going to do in terms of news? If this Trade Me thing's viable, that will be internationally interesting. So, yeah, there's a lot that can still happen, but clearly advertising alone, in the traditional sense that we've understood it, will not be the saviour of the media the professionally made media that we've known. So you've done some research on New Zealand On Air, which is probably the best place to start.
Yeah, well, let me ask you a question, actually. So, and for all the listeners out there, this is not scientific. We decided to look at funding over the last 12 months, and we looked at, where possible, direct funding of news. So, for example, we didn't include current affairs or factual documentaries, that sort of thing. We looked at effectively news formats. So something like Q&A, for example, we considered a news format. Something like David Lomas Investigates, we considered a current affair. But let me ask you a question first. So including, in New Zealand On Air do a number of things. They fund scripted content, factual programming, they do platform funding, they fund music, they fund games, they fund a number of things as an entity. But over the last 12 years, Duncan, 12 months, what do you think the total funding for news and related has been?
Well, you did ask me this off air, so I won't fake a guess at it. But my initial guess was in the low single digit millions. I think I guessed around 5 million. The real number is much higher.
Yeah, the real number is about 82 million. Now, of course, we need to strip Radio New Zealand out of that. Radio New Zealand being 66 million, so entirely funded, obviously, by public funding. But that leaves $16 million that's going into, New Zealand news and or journalism in some form or another.
Which which is quite a it obviously surprised me on the high side. Q&A, I think it's in the region of $1 million a year. What are some of the other big kind of recipients?
Yeah, so Kia Kids News, $1.6 million, Tagata Pacifica, $1.25 million Q&A, $842,000. You've got things like Newsroom Investigates, $400,000. The Open Justice Program that NZME run, $500,000. So, there's a number of them.
It's less kind of big tentpole things, but it's a lot of what are functionally kind of infrastructure.
Yeah.
For the system. And the thing is, once those things get funded, they can be quite hard to unfund because they become, critical to both the production companies, but also the organisations which, the platforms which air them.
Well, a good example, National Pacific Media Trust, just under $5 million, that's a critical function for our Pacific Island communities around New Zealand and around the Pacific, and our government, and New Zealand on Air, funding that entity.
Yeah, so and I think that's the points to something which is, I guess, a becoming a bigger tension here. If you talk to people at the big production companies and the big networks, which naturally have the biggest audiences, there's a persistent gripe that these kinds of shows and that they, while they're good and important, their audiences are tiny by comparison to what you might expect from a primetime show on a major network or something that gets heavy promotion on something like a TVNZ Plus or a 3 Now, and that New Zealand on Air, in supporting so many of these kind of smaller productions, and I'm sure that the big production companies and networks would look at a lot of what New Zealand on Air has funded for the spin-off and make the same argument. It's a totally valid perspective. And their point, I think, if I were to characterise it, is that those things are great, but they're nice to haves when your whole house is crumbling down. But because a lot of the sort of news like productions, and now we should extend that to include the likes of The Block, were previously commercially funded and are no longer, you're starting to get this kind of perverse situation where there is no impact on the sort of bulk of shows, news shows that are out there, but the most prominent ones, ironically, the ones that are most watched, are the most likely to either shrink or disappear. What's your kind of, having run a big network, what's your kind of perspective on that argument?
Yeah, look, it's really difficult sitting inside these organisations where you've got not only a decline in revenue and therefore your ability to fund programming, but you've got an economy that's in trouble and a government that's looking to cut costs through, all the various agencies that it runs. And I've got no doubt there's probably been lots of questions asked about New Zealand on Air and going, does it need to be shrunk? I'm sure the question's been asked, do they need to shrink it?
It might well happen. We've got a budget coming up within less than a month.
Yeah.
They've already pretty strongly signalled that RNZ,
Yep.
which got a big funding boost from the previous Labor government that stayed intact in year one of this government, that it will see a cut. It wouldn't be shocking at all to see New Zealand on Air join that.
I think an organisation, you would hope, and benefit of leaving the organisation and having an external view now as well, you would hope that any organisation that's providing funding and support to the industry can be agile to the needs of the industry and can flex up and down based on what's happening with the economics of it. And clearly we're in a time of huge distress right now, and it would be a bloody shame if we couldn't see core programming that we enjoy today on TVNZ and 3 and Sky Open, and Whakaata Māori as well, that we couldn't find a way to continue to fund those programmers, because often once they're lost, Duncan, they're lost forever. They often don't come back.
Yeah, and it's only a year ago that we saw, Sunday, Fair Go, News Hub itself all disappear, in part because while they were still very popular, all of those shows were rating very well when they were cancelled. And you go, were this screen production rebate available to them then? Maybe it's not a forever solution, but certainly it might have bought them a few more years of life.
Well, News Hub's a good example in some respects. Thankfully, many, I'm aware of have gone on to really good careers, elsewhere post the closure of News Hub. But a lot of them haven't stayed in journalism. A lot have been, have reinvented themselves into new roles in different industries. And I think that's part of the challenge is you don't just lose the shows, you lose the talent and the skills and the capability to bring these things back. And that's what I fear in the production community is if we don't have a resolute answer to solving this and the flexibility from our funding bodies to move with the times, then the skills are lost. So
let's move on a little, because the other, the New Zealand Film Commission invested $14 million into New Zealand films in its most recent financial year. It recoups some of that through the box office, but largely it is funding those on almost a sort of a cultural kind of basis. But in terms of what it oversees, it also oversaw $78 million in rebates across 39 New Zealand productions and $228 million in rebates for international productions. And it points out that's around $1.3 billion in qualified spending. So the 228 was what they got back in return for their $1.3 billion, and $40.8 million in post-production rebates. So you add those things up, that's about over $350 million. So if you look at the total, you look at New Zealand on Air and people rightly say, well, that's 160 odd million, but it's kind of dwarfed by the scale of the rebates. And even if you were to open them up to sports and to the various local productions, it wouldn't really make a dent in that fund. The only thing, and this is something that, interestingly, that David Seymour, the ACT Party leader and not normally considered a friend of public funding of many things, but he advocates for, he thinks that the Spur, for example, should be much more directed at local media and less at large international productions. That's also a case that's been made by the New Zealand Initiative. Forgive me if I'm oversimplifying, but that's my understanding. And so it might be that if with some tweaking, opening it up there, it's not going to change the world, but it might make the production of both sports and kind of what were previously commercially fundable shows more viable in an era where they are really kind of tenuous, right? If you look at the likes of Sky, TVNZ, WBD, particularly the latter two, the free-to-air broadcasters, funding far fewer local productions than they were previously. If they could buy them for 60 cents in the dollar, that might be quite a different thing.
Yeah. First of all, just a slight differentiation between the two models. So New Zealand On Air, often direct funding of a project or a production, up to getting close to 100% of the cost of the program that we're talking about, sometimes less, sometimes more. The Spur, the screen production rebate, is exactly that. It's a rebate. And what's interesting about that rebate, and I remember going down to Parliament with some colleagues a couple of years ago, and we presented the case study for Sweet Tooth. And Sweet Tooth was a show that's on Netflix but was made by Warner Brothers International. And it very clearly showed that for every dollar that production or the cost of that production in New Zealand, there was another $3 of roughly of economic benefit of people spending the money. So the crew and the cast that were here spending the money, food on set. There was just a whole raft of economic benefit, and I think that's one of the things that needs to be understood of why the Film Commission and the Screen Sector rebate is very powerful. There is a spin-off impact. Yes, there might be $350, $400 million spent, but that's probably translated into over $1 billion in economic benefit to the country. And with those international movie productions coming in and shows coming in, and particularly, you've got something like Lord of the Rings new movies being made very shortly here in New Zealand. That is going to just do tremendous things for brand New Zealand, tourism New Zealand overseas. And so we want to encourage as much of this as possible, particularly when we can quantify what the direct economic benefit is. And I think that's the point was where is the benefit of doing these things? And I think it's different in a Film Commission environment than a New Zealand on-air environment.
Yeah, and I think that you look at something like sports, for example, where and this is part of the argument for match fit, right, is that if you can see people on screen, playing sport, we've got issues with sort of fitness and with obesity, with a whole bunch of the kind of, with a less active population and having downstream health issues from that. And as we referred to earlier, you might put on commercials encouraging people to do things. Even now, I think you can get a rebate on your gym membership if you haven't had a gym membership for a certain amount of time. So there is a very well understood correlation between physical activity and lower health costs. So basically, what you're seeing now is all this stuff used to be funded by advertising, and we didn't really think that hard about it. And now that advertising doesn't fund it, people are making a bunch of different arguments about what different ways that government can support them so that they can continue to exist. There's another tension that we haven't really touched on, which is that the audiences are smaller now than they used to be, despite our population being bigger. Yep. And so effectively you're asked, and that's part of what is driving this too. It's not just that advertising is going somewhere else, it's just that the audience is smaller too. But, it's hard, right? Because if you stop being able to screen your sports anywhere, if you stop being able to make these shows, you start to become just a branch office of a whole bunch of international companies with no real understanding of what it is itself.
I think you're going to see the models. I mean, this is just a personal belief. I think you will see the models change over the next 5 to 10 years because to your point, there is the rise of the creator economy coming. Globally, they project that in the next 5 to 10 years, the creator economy will generate over $1 trillion in revenue. That dwarfs legacy media when that happens. When you look at the New Zealand on-air applications, a lot of them are already including as attachments to the production, YouTube, TikTok, other things. I think it's only a matter of time before you see the lead organisations, being some of the global platforms, applying for this funding, providing, back to your point, the audience of where they're actually engaging and where the real reach is and where the eyeballs are. And I think you're going to see that happen. It's going to be forced to happen, I think, over the next few years.
And I think that's probably the thing that sort of sits behind this, is that as you start to make these different kinds of arguments, there are people who have been excluded from the funding system who can and will and have every right to make the same arguments. And I think that's ultimately how the games rebate came about. That was one of the big surprises of Budget 23, I think, that they get 20% back from eligible spend there, because they'd been sitting going, hang on, people play games is a bigger industry than the movie industry and the music industry combined, and we're really good at making them, and yet we get no government support, and we're losing developers to Australia where they do have some degree of support. But the creator economy is currently untouched. But as soon as they start to sort of organize, and you look, and this is everything from Substack to OnlyFans to YouTube to TikTok, and I said OnlyFans for a reason. It's really complicated, and if you start to think about what should be included and what is, and how you start to police that content and check whether it's adding any nutritional value or if it's actually causing chaos to your society, it's only going to get more complex still. But the argument against the more that we expand the remit of the spur, the more there will be people at the edges of that expansion who look in and go, why not us?
I saw in the last week, and I won't name who yet, but a major one of the two largest advertising agency groups in the world announced that they had set up a new business unit in Australia and New Zealand, and they were putting together effectively the creator economy into this business unit to enable advertisers to be able to reach them, buy them at aggregate at scale. Now, that is the first step towards these guys being, recognised at a very different level in the likes of the New Zealand On Air and the Film Commission, because as soon as they can be put together in that bundle and recognised as a distinct group on their own, they're going to have a voice, and that voice will rise.
Yeah, so we should probably leave it there. I don't know that we've solved anything, but hopefully given some sense of the sort of the scale of government participation in the market, looked at what's happened with advertising and looked at what some of the options are for for resolving part of this and a lot of the tensions and complexities along the way. This has necessarily been a wide-ranging discussion. We might well have missed some things or kind of been overly reductive in our framing. Apologies if so, but also if you'd like to sort of get in touch with either of us, please do email me, duncan@thespinoff.co.nz. Really interesting topic with the budget coming up. I'm sure there'll be more to discuss on it, but it's very clear that the advertising trend is pretty baked in. So if we want to maintain what we have, or I'd imagine even growing it, something will have to change there.
Good to see you back, Duncan.
It's good to be back. Thanks, Glenn. Thank you, Tia here.